Morning traders, Paul here with GammaEdge. Today is Monday, the 12th of December. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Overall, situational awareness is really important this week. It is quadruple witching. If you don't know what that is, I would urge everyone to look it up. It's a big deal. Another thing that is not getting a lot of attention, but we've seen some influence on the markets, is the VIX monthly, which is the largest OPEX of the VIX weekly monthly series. It doesn't occur until next week. When this occurs, we tend to see out of sequence hedging, and that can add some volatility. I've put some dates in the past where that has occurred, and I would urge everyone to go take a look at the behavior around those dates. CPI and FOMC are on Wednesday, the 14th, and this is a significant series of news. So while we try to minimize the impact of news, you cannot ignore these, as they are very, very important and really are throwing the markets one way or the other. From a technical analysis perspective, we think the broad SPX is under downward pressure. We'll talk about that here a little bit. Market models are all cash and short. You'll see that very clearly. And then sequencing matters this week, and we think it's important. If there is monetization, when it occurs will influence the overall prices. But again, with the CPI and the FOMC holding out there, we could see just a lot of fireworks and coasting into Wednesday. Added this, if you don't have this, I would urge you to go out to the CBOE website, or you could just print this, put it on your wall, save it. It's got very good information, and I would urge everyone, if you're looking at options or trying to understand the market, you should at least be aware of the different things that you see here. Their 2023 calendar will be coming out shortly. You can see here's January 23, January 24. I'm sure we'll get the updated calendar here any week now. As I said, the SPX is under pressure. We think 38.35, which is the JPM short call strike, is a near-term target. Right now we are in the money on those calls. They have a delta of about 0.6 or minus 0.6. We feel that's material. We also think, because of this downward trend line, even though we're not big TA folks here, you cannot ignore just literally how precise this has been in this downward move. Because of that, we don't think we're going to break above this line anytime soon. And because of the short-term break on this upward trend line, we are now thinking that we're confined into this area where we are setting a short-term target to this 38.35 zone by the end of the month. We could certainly bounce upward, but we do not think we're going any higher than this trend line, and lower would be actually good for the folks who are looking at the market on the downside. But nevertheless, we do think this 38.35 is a real possibility. As I said, market models are in cash or short. Here's why. Tuesday we've got what we call a inversion, a confirmed inversion of the ribbon. And when we see this, we have confidence that we should be looking at the downside. Now, it doesn't mean we can't bounce up in the cumulative tick, but effectively, after we sold off on Tuesday, we've tried to rally. We've not been successful, and you can see Friday afternoon we broke back down here. So we think this is where we are favoring selling the rips and buying the dips, and we'll just have to see how the week plays out here. Sequencing matters this week. As I said, we've got a number of things that are setting up. Over here on the left, you can see the SPY, the Qs, and the IWM. And this is something called net notional delta. This is looking at the overall deltas across the chain just through the end of the week. And you can see the SPY and the Qs, IWM are all negative. And you can see that the SPX A, which is the AM settled, it's our symbol for this within the Discord, is very, very positive. And what this means is that this is a cash settled, by the way, which means that there is no real impetus to monetize. It's just really money management, which would cause an early roll to a later expiry. There is no possession or taking possession of the SPX, and as a result of that, your account is credited or debited accordingly, depending on how you played it. That is not the situation with the SPY, the Qs, and the IWM. Those are equity settled. And so if you are in the money at expiry, if you have the capital, you'll be assigned short or long depending on your position. If you don't have the money, other things may be liquidated or you may get a margin call. What that means though is that we are put dominated in the SPY, the Qs, and the IWM, and we are call dominated in the SPX. When these get monetized, and we do think the SPY, Qs, and IWM will get monetized, most people like to use the options for capital efficiency. They don't want to necessarily be assigned. And so we do see closing of these puts, net puts, this week, and that could put upward pressure on the markets. Now, offsetting that is what occurs Thursday, which is the last trading day for the monthly SPX, and Friday, which is the settlement. That's the AM settled component of this, which is positive, right? So we have a lot of calls delta out there, which is positive delta on the trader side, and once that is settled, that call delta comes off the table, and so the dealers will have to adjust. So when we take call deltas off the table, we typically have downside pressure. So we have a contention setting up. You know, I like to look for these divergences, and we certainly have them. So sequencing matters. When and if these are monetized, we do think they will get monetized. More so, there isn't necessarily a huge push to monetize in the SPX, but the AM settled is largely institutional money, and as a result they follow a pattern. And this week we tend to see the rolling out or down, but certainly out in time, up or down depending on their thesis of this money, and when they close that delta, that's going to have a material impact which could be offset here. So just everyone should be paying attention to this. We're also looking at what we call delta moneyness. Delta moneyness shows us the landscape. We've opened up the filter here, so we're looking really at the entire SPX landscape. And you can see this week, 5 days out, we've got a large spike here at the 2000 strike. Yes, the 2000 strike. Also down here at the 1000 strike. Up here at on the put side of the equation, we have a large open interest coming off at the 5000 strike. This is patient money. It's been there for some time, and it's got to go somewhere. The green indicates they are heavily in the money, so the deltas are +1 over here on the trader side, -1 here on the trader side, and as a result, when you net these across and you look at the magnitudes over here, we actually have a little bit more coming out of this as it gets monetized. So we're looking to see any changes at these strikes this week, and we're also looking to see what the landscape has in the area leading up to it. You can see there's not a lot going on the first few days of the week, and so charm flows are expected to be negligible. So we're expecting just a little bit of coasting, and if anything, this will contribute a little bit to a positive charm, meaning the dealers are having to buy the underlying, and that will have a slight upward effect, and that could be combined with the SPX, the Qs, and the IWM, and what we saw there in their overall deltas. Getting over into the gamma world here, I want to call out the positive gamma right goalpost, as we call it, is down from 4100. We're seeing that drop, and we're also seeing the left goalpost, the negative GEX, also drop. When we see this occur, the entire structure, this is the combo complex, so this is the AM and the PM on the right hand side here, and when we see that, we have some forward-looking information that basically says the complex is moving down, not up. So pay attention to that, and that combined with some of the TA and the stuff I said earlier with the cumulative tick ribbon, our market model, all is supportive of continued downside movements. The PM settled complex, this is Monday through Friday. These expire at the end of the day. This is the aggregate of that. You can see we're getting more and more red in terms of the deltas. So this is becoming more put dominated. Calls are being closed, puts are being opened. And so you're seeing that across. And that's going to make it very, very difficult to advance up. We do not anticipate any broad movement up into the 40-75 zone. Above that, calls are still very much in the money and call dominated above that, but below it, we're seeing more and more puts go in or calls being closed. And when we see the calls being closed, that exposes that put side or the negative side of the deltas. Transition, we're just below it. Very tight transition. We could break either way, and that's something to pay attention to. When we take a look at the 1 DTE, or excuse me, the 0 DTE, very large amount coming off today. This is abnormal. We're at the bottom of that transition. You can see what's vaporizing today, but largely negative coming off. This is a lot of put structure coming off. When we see the put structure coming off, that actually emboldens the calls in their dominance, and so it'll be interesting to see if people take advantage of perhaps an upside push, especially in combination with the SPY, the Qs, and the IWM. So again, nobody knows what's going to happen here, but this is one of the things that could happen. When we take a look at the 1 DTE, very important to look here. Again, transition, 1 DTE, very small amount here. That 39.90 looks to be an upside area that could be a short-term target, 39.25 to the downside. We're not thinking we're going down here today. But in terms of overnight parking, we would not be surprised at all of moving into this area, moving into the upper side of transition. We'll just have to wait and see. But anywhere you see the gamma flipping back and forth and you see the delta flipping back and forth are likely areas of parking zones into the overnight. And again, remember, 1 DTE is Tuesday's expiry, so this helps set that up for you. The combo, we're right in the middle of transition. We're seeing a fading effectively of the call deltas. We're getting more and more red. You can see all the red that's up here. 2 weeks ago, this was all green. One thing I do want to point out to you, we've got 45% of the gamma structure expiring by Friday. And when you add in all of the week, we're over 50% of the gamma structure is going to get redistributed this week. That is a very significant and large amount, and everyone should be paying attention to that. What does it mean? It means effectively that we are potentially going to stay locked in this overall range. We think the 3,900 to 4,000 range is key here, but remember I was talking earlier about that 38.35, which is sitting out right down here. And so we think that if people are emboldened to the downside, we see a vaporization of the green deltas, which are the call sides of things. If we see more puts going in, or we see these calls go get monetized, that could actually drop us down, and we'll have to play that accordingly. We think it's very difficult to push north with this given structure. Right now, we need more calls to go in. We need the delta structure to change, and we're not seeing that right now. Finally, last slide. Just want to call out, this is an extremely large gamma value. We have not seen this in recent history. That upper goalpost is for plus GEX is 4,000. Down here, 3,800 minus GEX. And you can see 3,850 and 3,900 are all contending for this. There is no other contention up here for the 4,000 strikes. So that's a very, very important observation. Note, it's going to be, when we go through this, if we go through this, it's going to be very, very significant on the dealers. So we'll have just to pay attention to that. We are sitting right here, very narrow transition. Typically when we see the combo complex transition tighten like this, we can break either way. Remember that 38.35 is down in this zone. In fact, it's sitting right there. And the deal with that is that's the end of the month target. And so we want to pay attention to that and possibly play for that downside. So with that, I'll call this to an end. I would urge everyone to come into GammaEdge.us, click on the pricing tab, and that'll get you into the Discord once you fill out the blanks. 14-day free trial, no risk to you. Here on Twitter, follow us at GammaEdges with an S, and then on YouTube. If you like today's comments, let me know. Smash that like button. It gives me immediate feedback that I'm providing what you want. And then, of course, subscribe, because Taylor, myself, and Michael post videos to keep you abreast of what's going on in the market, at least from a Gamma perspective. So with that, bid you farewell. Make it a safe week. Remember, cash is king. If you don't know how to handle the news, if you don't know how to handle the quad witching, just sit on the sidelines, eat some popcorn, and learn. So thanks everyone. Hope to see you in the Discord.